Good evening, investors, and welcome to Nifty BN. We're breaking down the latest quarterly numbers just released by Mahindra Logistics. The headline shows an 11% rise in revenue for Q2 FY26. Let's get into the details. Kicking off with the consolidated numbers for the second quarter. Total revenue climbed to 1,685 crore rupees. That's an 11% jump year-over-year from 1,521 crores. The company states this growth was broad-based, driven by its 3PL, freight forwarding, mobility, and express segments. Now, let's look at the profitability in this KPI grid. The company remains in the red at a consolidated level. The PAT, or profit after tax, for Q2 FY26 was a loss of 10.35 crore rupees, which, as the text notes, is a slight narrowing from the 10.75 crore loss last year. The PBT, or profit before tax, stood at a loss of 5.41 crores. Digging deeper into the consolidated metrics, EBITDA for the quarter was up, reaching 85 crore rupees, compared to 66 crores last year. The diluted EPS, while still negative, also improved to -1 rupee 20 paisa, up from -1 rupee 44 paisa year-over-year. However, the standalone performance tells a different story. Wow! Here, the company is profitable, but that profit has declined. Standalone PAT, or profit after tax, fell to 3.79 crore rupees, down significantly from 8.54 crores last year. Similarly, PBT dropped to 5.12 crores. On the operational front, there are some key positive takeaways. The express business, well, it finally achieved a positive gross margin for the first time since its acquisition, with volumes up 7.2%. The freight forwarding segment also showed strong sequential growth of 22%. The mobility business is also holding strong, posting 15% growth both year-over-year and quarter-over-quarter. MLL also launched Allied, a new B2C mobility service. On the infrastructure side, the warehousing network has now expanded to 22.1 million square feet. The recent festive season was clearly busy. The e-commerce network handled over 3.5 crore shipments. The CEO noted the company is in a period of strategic realignment, focusing on cost optimization, including a 20% reduction in white space. The focus for the second half of the year will be on execution and network optimization. So, to sum it up, Mahindra Logistics is in a deep transformation phase. While the consolidated bottom line is still negative, as we see from the H1 PAT loss of 21.15 crores, key operational segments like Express are starting to turn a corner.